There we go.
All right. Good morning, everyone. My name is Barbara Marinelli. I'm with the Heritage Commission. I'll welcome you to our seminar this morning. This is a little bit different format than we usually do. It's a more Q&A and on a subject that we normally don't discuss, which is managing small profits, in particular, tax reporting. And today I'd like to welcome our guest, which is Linda Scafiro. She's a CPA and partner with Brinker Simpson in media, and her expertise includes nonprofit organizations, long-term care facilities, adult care centers, and HUD finance facilities. And also with us is Ted Perkins. He's an attorney and CPA. He is principal shareholder with Gibson and Perkins in media in Haddon Heights, New Jersey. He's also a faculty member with Villanova Law School's graduate tax program, and his areas of focus are business, transactional, trust and estate planning, real estate, and tax law. Welcome, and thank you very much for participating in our group. I'd like to start off the I'd like to start off the Q&A this morning with one of the questions which will come up that did come up with many of the Heritage Commission members, and that is Form 1099 miscellaneous income, and then also to the W-9s with your vendors. You know, who the questions are: what's the criteria? Who do you issue a 1099 to? You know, there's rental on properties. Sometimes people have historic properties that they're renting. And then also to summer help, you know, summer interns. And then the W-9s, do you have to do it for all vendors? And what is your recommendation? Linda, I think you said that you were going to answer this question for us.
Yes, I'll take this. A few years ago, IRS started a new form. I'm sorry, 1099 NEC. So a lot of prior reporting that was done on 1099 miscellaneous is now done on NEC, which stands for non-employee compensation. So the general rule is if you pay $600 or more for services to someone who is not an employee or to a partnership or even to an estate or trust, you're required to issue that person a 1099. And you issue a 1099 NEC. Because it was services provided by somebody who was not an employee. I think we'll talk about the deadlines. So the NEC and the 1099 miscellaneous, let me just backtrack a second. The 1099 miscellaneous now is reported things like rent paid, and certain prizes and awards are reported on the 1099 miscellaneous. Both the 1099 miscellaneous and the NEC are due to be mailed to the recipients by January 31st for the prior calendar year. And this is IRS at its best. The NEC is due to IRS by January 31st, but the miscellaneous you have until February 28th. But both are supposed to be mailed to the recipients by the 31st of January. Barbara asked about a W-9. W-9, every vendor or anyone you pay money to really should fill out a W-9, which is just certifying their tax ID number and also their mailing address and business name or whatever name they're using. The W-9, my rule and pretty much the rule here at the with our clients at the firm is before you write that check or pay somebody, you should have a W-9 on file. And that's important just to have the person's information. But what happens is IRS, months after you file the 1099s, they match up. So they match up the vendors and their tax ID numbers and their addresses. And if you don't have a current, accurate W-9 on file, it's possible that you don't have the most recent information, and then you're going to get a notice from IRS. And I haven't seen it very often, but there could possibly be penalties if you're not reporting properly.
Barbara, can I ask a question? Is it okay?
No.
So let me just understand this. The 1099 basically, miscellaneous is like for rents, prizes, and that kind of thing. And
Mhm.
the NEC is really when somebody is performing a service as an
Service.
independent contractor. Is that a good way to kind of look at it?
That is a good way to look at it. Plus one more, Ted, since you brought it up, reminded me, any payments to an attorney have to be reported on 1099. Any payments for services to an attorney have to be reported on 1099 NEC. And that doesn't have the $600 threshold. If you pay an attorney $100, it's supposed to be reported on 1099 NEC.
Wow.
Sorry.
Why attorneys? But how about this? Isn't there a new 1099-K now that if you accept credit cards, you have to do it on a 1099-K if they
Not
pay it by credit card?
that there is a rule, but they keep pushing back the deadline for smaller organizations. So the larger organizations are required to do 1099-K. I don't think the smaller organizations, I can double check, but I don't think they're required. The dollar threshold, they keep raising. I think it's $50,000 or $100,000 now. So
Well, that's to really nab the guys who are doing business on the internet, I think, isn't it?
it was. I think it was the Amazons and the
Yeah.
you know, the bigger businesses with the bigger volume.
So one of the things that people are using more and more now is the Venmo. And the Venmo, if I'm not mistaken, I heard something that they're actually sending out statements. Is this somehow reportable? The Venmo monies that are coming in, maybe not so much the small amounts, but if you're paying vendors with Venmo, I'm sure it's the same reporting, but is there something different with that?
Well, it's funny. Like I said a minute ago, and correct me if I'm wrong, Linda, but what they're trying to do with these Venmo transactions is kind of nail the guys that have been trying to get around the reporting requirements because they say they're family or related party transactions.
Mm-hmm.
And where they're really doing a business on the internet. And I think that's where the 1099-K is kind of focused on. Is that your impression, Linda?
Well, I think the 1099-K, it's been around since before Venmo got so popular, but now I'm sure it's going to incorporate Venmo. Barbara, I'm not really sure what exactly the reporting Venmo is doing. I don't know if they're issuing a 1099. Again, I think that was one of the things that has been the deadline's been kicked down the road a little bit, but I can find out for sure and let you know, and then we can push it out to the group.
Okay, thank you.
There is a question in the chat. It says, we rent our space, our landlord gets a 1099 MISC.
Mhm. That's correct. And I think there was one of the questions in the questions that came before the seminar that if someone rents space from you, do you issue the 1099? And the answer is no. Always the payer issues the 1099.
There was also the question, Barbara, about interns, summer interns. And the question there is whether you issue a W-2 or a 1099. And the issue is whether this person is really what they call a common law employee. Mm-hmm. And what we always tell clients is that if you direct their activity, you state their hours, you provide a desk, you control what they're doing.
Right.
That's really kind of the test. There's all these tests. I think there's 12 points that the IRS uses. But if somebody, comes in on your schedule, now the opposite is really a lawyer or an accountant where you say, I'm going to task you with doing my tax return, but it's up to the accountant to determine, how they go about that process. So if you have control over the person, that's a W-2. And I think most summer interns hopefully would be under that classification. I don't know too many that just say, okay, come in when you feel like it and do what you want. That's not usually a good program for summer interns.
Yeah. And so this is a very interesting question to me, because I imagine a lot of these organizations are completely volunteer and don't have people on payroll. Is that the case, or is that not the case?
Yeah, I'm seeing heads
I
nodding.
see somebody shaking their head, yes.
Right, so if you don't have employees and you're not paying payroll, I don't, I don't know how to advise you. Ted's 100% right. The definition, what defines the difference between an employee and a subcontractor, which would be paid on 1099, is definitely control. Is there's 12 issues, 12 points, as Ted mentioned. So if you control, then they are an employee. Now, I don't think anybody's going to want to set up payroll and start paying payroll for interns. Remember, you have the $600 threshold too. So I have no idea, how much the interns are paid if they meet that
Now, I have
$600 threshold.
another question on that. And, thinking as an attorney, if you have volunteers coming on to your location or even doing business remotely, more that they're coming into your facility and performing work functions, make sure that your liability coverage is in place to cover any problems that might develop. There's a different level of responsibility for somebody that you invite onto your location as opposed to somebody that comes there on their own volition, so to speak. So I would be concerned about, just make sure your liability coverage would cover them if there's an accident or something, they're injured at your location. So anyway, Barbara, next question.
Okay. Kate, do we have anything else in the queue for the?
No, nobody has posted anything yet, so.
Okay. So then I'd like to go on to the state financial reporting. The first question is should all the nonprofits be a PA corporation? I've come across myself a couple that have been around for a very long time and are not PA incorporated. And with that, I've come across the BCO 10 form and the BCO 23. And I have some people that are required to file the BCO and get the certification from the state that allows them to collect donations in the state of Pennsylvania. But is there a criteria for, like, should everyone do that, or is it something that there's a threshold that when it's required to do it?
Ted, do you want to address the incorporating?
Yeah, let me address the corporate issue. And the rule is basically that a corporate, to be as far as 501c3, you can be a corporation, you can be a trust, you can be an unincorporated association, or you can be a limited liability company that is treated for tax purposes as a corporation. Partnerships are not permitted to be a tax-exempt 501c3, at least. Now, the question is whether I should be a corporation or not. And I assume that maybe the question is whether I should just continue as an unincorporated association. And that's usually, booster clubs and that type of thing don't go through the incorporation process. For a couple of reasons, I think it's a good idea to be a corporation if you're operating as a 501c3 organization. Number one, your organizational documents have to, and when you submit the 1023, which is your application for exemption status, require that your organizational documents include certain provisions. They're required in the organizational document. In the context of a corporation, it's your articles of incorporation. And I'm not sure how that would really be established if you're unincorporated. Now, from a liability point of view, obviously a corporation protects the members and to a certain extent the board members and the officers from liability. But even in an unincorporated association, the members are protected under the statute from personal liability. So, that's maybe not the central question, but here's the deal. As an attorney, if I see an organization that's unincorporated and there's a lawsuit or potential liability, I'm suing everybody. I'm suing everybody, even if the statute says you're not, you don't have personal liability as a member of an unincorporated association. I'm probably going to sue you anyway. Now, who wants a lawsuit? Who wants to be involved in a lawsuit? So for a couple of reasons, number one, I think it's easier to establish and qualify for tax exempt status as a corporation because of your organizational document requirement. There's also a tax ID number that you have to submit. I don't know in an unincorporated association whose tax ID number you use, but it just seems to me it streamlines the qualification process. It streamlines the operational process, and it also, I think, is very more appropriate and provides better protection for the managers or the members and the board of directors, the officers. So I would recommend it, although it's not necessarily a requirement. I think it's a good idea.
As I say, if this helps or doesn't help, I believe almost every one of our Pennsylvania nonprofits are incorporated. They're
No,
Pennsylvania
absolutely. Yeah, I think it's
nonprofit corporations.
well, usually the smaller one, the booster clubs, that type of thing. Maybe you're not incorporated, but if you're really operating on any kind of level, I think it's the way to go.
I think
Okay.
like part of the question is to be incorporated with the Bureau or associated with the Bureau of Charitable Organizations, which is required if people are seeking state grants. But it is like if you're not seeking state grants, it's not necessarily required. So I think like one of the questions is that came in beforehand is like, is it required if you're a certain threshold in terms of in-kind donations as compared to financial donations, or is it just all grouped together? Is there a requirement to be registered with the Bureau of Charitable Organizations if you're not seeking state grants?
Right. So
Are you
we,
talking about the BCO 10 now?
Yeah.
Okay.
so the BCO 10 is the registration with Pennsylvania, and it's required if you pay someone to solicit donations, Pennsylvania residents to, if you pay someone to solicit donations of Pennsylvania residents, or if you go over $25,000 in contributions, then you're supposed to register within 30 days of either of those events. And the BCO 10 is an annual registration. And then you have to renew every year. And it's the due date for the renewal is by the 15th of the 11th month after the end of the fiscal year. So if your calendar year, it's due by November 15th. Along with the renewal, depending on your amount of contributions received, there's financial statement requirements. And if you receive $25,000 or less, you can have an internally prepared financial statement, and the annual filing fee is $15. And then as the amount of contributions increase, you might have a more strict financial statement requirement. 25,000 to 100,000, you can have internally prepared, or you may have to have, or you could have an accountant do what we call a compiled financial statement or a reviewed financial statement. 100,000 to 500,000, you could have compiled, reviewed, or audited. And over 500,000, you're required to have an audited financial statement, which means you have to pay an outside accountant to come in and audit your books and issue a audited financial statement report. The Pennsylvania Public Disclosure Form, BCO 23, is an annual filing as well, and that's required if you don't file a 990. So if you file a 990 EZ or a 990N, you have to fill out you have to annually do the BCO 23.
Okay.
And
We
that,
have a,
that-
oh,
just let me,
no, keep
that has
going.
that has the weirdest due date. It's due 315 days after the close of the fiscal year, which if your calendar year, it's November 10th. It's just the weirdest, it's the weirdest deadline date I've ever seen.
Except for leap year.
Well, hopefully nobody has a February year end, so.
By the way, just go back, Kate, to your original question. As far as corporations and registration, there's no requirement that you be a corporation in order to file the BCO 10, but there are exceptions. If you're religious, law enforcement, educational, hospital, Veterans Administration, library, you don't have to file those forms, but there's no exception for being a corporation or non-corporation. Can I just mention something else that's a new reporting requirement that was just implemented as part of an amendment to the Pennsylvania corporate law last year? And on November of last year, Governor Wolf signed into law a new requirement that requires all entities, including nonprofits, that do business in the state of Pennsylvania to register and file an annual report. This is a new requirement. Actually, there was a requirement that you do this every 10 years before, but I think everybody just ignored it. But now it's an annual requirement, and the report has to include your business name, where you were formed as far as the jurisdiction of formation, your registered office, the names of the governors, directors, or principal officers, your address of your principal office, and your entity number issued by the Pennsylvania Department of State. Now, this goes into effect in January of 2024. The first report that is due for nonprofit corporations would be July 1st of 2025. This requirement, though, even though there's no penalty for non-filing, if you don't file the return, and this applies to all reports that are due to the state of Pennsylvania, not only the new reporting report or the annual disclosure report, but also potentially your BCO 23 and your BCO 10. If you don't file the report within 60 days of the department notifying you that you have not filed the report, the Department of State can actually dissolve your entity. So there's a dissolution. It's kind of a draconian remedy, but if you don't file this report, or if you don't file any of the other reports that are required, they can actually force a dissolution of your entity. There is a reinstatement process, but just be aware that this is coming online in 2024, and all nonprofits would be required to report by July of 2025. There is kind of a companion piece to this. There also is a federal reporting requirement that also requires a reporting of much of the same information. It's a report that you have to file with the Financial Crimes Enforcement Network, which is a bureau of the Department of Treasury. It's called FinCEN. And that's getting a lot of publicity and a lot of notice among financial professionals, accountants, and attorneys. That report is also required beginning January 1st, but that one does not apply to nonprofits. So just be aware that this new annual report, it's not as if you don't have enough reports to be concerned about, but this is another one that kind of adds to the list.
Okay, we have a couple of questions in the chat. One of them, Linda mentioned if you're getting donations from Pennsylvania residents,
So-
does Pennsylvania, right?
It's soliciting Pennsylvania residents.
Right, yeah.
It's
Oh,
donations
soliciting them, okay.
worldwide.
Does that include getting support from other nonprofits? Or is it like private residents?
That's an interesting question. I would, and the support from the other nonprofit comes in as is considered a contribution?
I don't know. Kyra, do you want to unmute yourself and?
Yeah,
Okay.
so I've just gotten different answers from this question from different accountants. So I wanted to see what your definition was, because one person said Pennsylvania residents are just humans. And then someone else said, no, Pennsylvania residents is any entity except for government sources. So, you know, if we get a grant from a foundation or a nonprofit, they said that counts as a Pennsylvania resident.
I believe that's correct. I believe that's correct. It's a grant, and is it a fee for service grant, or it's just a general grant? Is it restricted in some way?
I mean, we've gotten both restricted and unrestricted.
Well, if you're performing a service for the grant, then it would be considered program service, and it would not be a contribution. If it's a straight unrestricted grant, then it would be a contribution.
From
Yeah,
a Pennsylvania resident.
I don't know that I don't know that you get hung up on Pennsylvania resident. The requirement is if you're soliciting Pennsylvania residents, which would mean if you're applying for these grants, then that does meet the requirement that you have to register and report it.
Okay, yeah, because somebody said you didn't have to. It was only if you were doing like fundraising letters to individuals. So that's what I wanted to
I
clarify.
don't think that that's correct, Kyra. You know, the wording of the statute, I think, is contributions from Pennsylvania residents. It doesn't say anything about individual residents. And so if you get a corporate contribution, I think, you know, that would come within the definition of a Pennsylvania resident.
So a foundation is a Pennsylvania resident?
Well, if it's not a grant, if it's a contribution, any entity that would make a contribution to your organization, like it's a Pennsylvania, you know, located in the state of Pennsylvania, I think that would count. I think
Okay.
error on the side of caution there. You also, I think, Linda, you mentioned this, the $25,000 requirement is based on, for BC 010, is based on national contributions, not just Pennsylvania contributions.
Right.
And you have to file within 30 days of getting that, you know, going over that limit.
And then I also saw on the website, it said that there's a sort of indefinite extension. So is there a penalty if you don't get it within the 30 days? Because we're transitioning from a fiscal sponsor, and we've been getting so much conflicting information, including whether or not the money that we got while we were under a fiscal sponsor counts for that 25,000, because technically we didn't solicit for it, they did, but now it's ours. So it's very confusing.
Well, here's the thing. If you don't file, as I mentioned before, if you simply don't file, I don't know whether there's a penalty for late filing, but if you don't file at all, and you get a notice from the Pennsylvania Department of Revenue, or the Department of State, I'm not sure which, but they can't even dissolve your organization, so.
Yeah, no, I mean, I'm going to file it just to be on the safe
Yeah,
side.
I-
I just have gotten conflicting advice, specifically what is a resident, and then also if we applied for a grant, what, so technically we didn't apply for the grant. The fiscal sponsor applied for the grant, but it was for us, and now we're independent. So this money now shows up in our bank account. How do you account for that?
I would say file as soon as possible.
Okay.
Yeah,
Yeah, that's what
it
I'm
seems to
doing.
me that you've met the requirements at this point.
Okay.
Ted, as far back to the dissolution, the state being allowed to dissolve you, have you ever seen that in practice?
Well, it's new, and it's not
Oh, that's
something that
new.
we've
Okay,
had
that's part of the new
experience
law.
before. You're supposed to get a notice, Linda. I mean, it's kind of draconian. I don't know whether there is also, by the way, some grandfathering of this whole thing. So you won't see any of this enforcement until 2026 or 2027. But you know, it's out there, and you're supposed to get a notice from the Department of State, and then you're supposed to be able to respond to that. And there's also provisions that allow for reinstatement. So I think that would be the last thing they would do. You know,
would
they
think
don't
so.
want to start dissolving corporations and nonprofits all over the state. That wouldn't be a good way to attract business to this Commonwealth, I don't think.
No.
But we don't know
Okay.
yet, because, you know, the history is not there yet.
There's another question, because for Ted, just to be clear, the nonprofit should be incorporated.
That's
you
my
recommend?
opinion. It's not required, you know, to be a 501c3 organization. You don't have to be a corporation. You can be a trust, you can be an unincorporated association, or you can be a limited liability company. If you are a limited liability company, the requirement is, though, that you treat that limited liability company as a corporation for tax purposes. But I think that there's a lot of operational, just seems to me it streamlines the qualification require, you know, if you file your 1023, I don't know how you prove that you have the required provisions in your organizational document, because it's the formation document that you have to have certain requirements. You have to be for a public purpose. You can't, you know, have, you have to restrict lobbying. You have to have a dissolution provision. All that's got to be in your organizational document, which is the Articles of Incorporation. So the long answer, that was the long answer. The short answer is I recommend. I'm a lawyer. What do you want from me? I think it should be a corporation. I just think there's a lot of reasons to do that.
And
And
it also
Linda, I think agrees with me.
protects
She says all her
100%.
clients are
100%.
corporations.
I think every one of them is, or
and it protects the individuals if it's
Well, you know, the
incorporated as well,
statute
right?
says that you have limited liability if you're a member of an unincorporated association. But like I said, I don't care. If I'm that mean lawyer that's looking to collect money, I'm going to sue all you guys. I'm not that guy, by the way.
good.
One of the question, and I think this is referring to the BCO 10 or 23. How does this apply to churches
Churches are exempt.
Exempt, yeah.
from the BCO? Yeah.
Mhm.
All right. And then there's a question that was kind of similar to what Kyra had said. When transitioning from a fiscal sponsorship to your own nonprofit status, what is the process for that as far as proper reporting and documentation?
So you're going from
From a fiscal sponsorship to their own nonprofit. So instead of having like an umbrella.
Right, meaning that
office.
the sponsor already has 501c3 status, whereas the transitioning entity doesn't. So they have to apply for it. They have to do the 1023, the application for tax exempt status with IRS. That's the first step.
Yeah, that would be the first thing, would be the 1023, which is the application for tax exempt status. And then you go from there. But I don't know what their if they'd have to, I'm not sure what the details of their organizational status, if they're already a corporation, if they're already a nonprofit, but I guess you just start as if you were new. You were a newly formed nonprofit.
Okay. All right, and then there's another question. What are the annual and multi-annual reporting requirements for nonprofits? And how, that's a two-part. So how can nonprofits stay informed of changes in reporting requirements?
And so the annual is, they have to file the federal form, the 99, some form of the 990, if it's the 990N or the 990 EZ or the regular 990. And then if they are located and operating in Pennsylvania, either the BCO 10 or the BCO 23. 1099s, we already talked about. If they're paying payroll, then there's quarterly payroll tax returns, annual payroll tax returns, W-2s.
Yeah, the major ones though are the the 990s, the BCO 23 and the BCO 10. The rest are kind of operational, wouldn't you say, Linda? I mean, any
Yeah,
business would have to,
depending on,
like,
what they-
comply with that.
Is there anything that's multi-annual, like every 5 years you have to do something, like anything like that, or is everything just annual?
If you apply for sales tax exemption as a nonprofit organization, which is very, very difficult to get, there are very strict guidelines. I believe that renews every 5 years. You have to, once you are granted that exemption, you have to renew that. I believe it's every 5 years. That's the only form
Everything
that I can
else is
think of.
annual.
Yeah,
Yeah.
that's the only thing I can think of that's not annual.
Okay, and so how can nonprofits stay informed of changes? As Barb said, like there's been
They
a bunch
hire
of different
Linda and
changes.
she'll,
I was just,
yeah,
I was,
that's what they
hire
do.
I said, I don't want to be a
So you
wise
can
guy,
hire-
but you
hire
could hire
Linda.
our firm.
Yeah, there you go.
I don't
I
know
think,
that
and all kidding aside, I think
we lost Ted. I don't know what happened.
Anyway, you're
Huh.
saying something, Linda?
A part of the materials that I put together are a list of some websites. Unfortunately, I don't think there's one website that you're going to find all the reporting, right? So there's going to be, different resources for federal, he's back, different resources for Pennsylvania. I don't think there's going to be one place that you can visit that's going to give you, all the updates.
All right.
All right,
See.
now Ted's muted. He's back, but he's
Yeah.
muted. There he
Yeah.
goes.
Come
I'm back.
back.
What I was going to say,
There
and
you go.
I kind of lost the train there, but I think what you ought to do is you have to hire a good accountant. And, obviously you've got a good one right here, but somebody that not only is a good accountant, but also knows nonprofits, because there's so many filing requirements. And we've just touched the surface here. I mean, if they don't know what they are, you're gonna miss the boat. And sometimes there are penalties that flow through to the managers and the officers if you don't file. It's particularly with the IRS. There's certain compliance issues there. So but I would ask them, do you ever do this? How many nonprofits do you have? And that's the best way, I think. So did I give you a big enough commercial there, Linda?
Yeah, thank you, Ted.
Okay. glad to help.
Okay, we don't have any more questions in the chat. Barb, do you want to go into your next one?
So I wanted small game of chances license in Pennsylvania. That's been kind of throwing in conversations with multiple nonprofits. I hear all the time, we're doing a raffle, buy tickets, do this. And some groups know about the small game of chances, some don't. The question is it necessary for it's usually through the county of which it's occurring. Which then, you know, with the Heritage Commission coming through Delaware County, you know, we're, you know, if somebody approaches us and says, okay, you know, at your meeting, we want to do a raffle, well, I need to see the license. Do you have any information on this, of, you know, if there's any exemption to it? You know, and
Yeah.
then reporting the winnings. Like if somebody, you know, they get something that's something that have a value of $250 or something like that. What is the reporting requirements, if there are any?
Well, you know, as far as the licensing of this, I think it's important to know that you have to have a license. They're basically, and the licenses are controlled by the treasurer of the county where you're located. So you have to go to the county and obtain a license if you're going to run a raffle. There are two types of licenses that you can obtain. One is a regular license. That's an annual license, and it's $125, I think, is the fee. You can also get a monthly license, which is good for 30 days for $25. This is all controlled by statute, by the way, and it's not just raffles, but there are other games of chance. This is gambling. So, you know, we look, I don't know. I think we've changed the attitude toward gambling over my lifetime. It used to be like that was illegal, but now the state's in the business, but they do want to regulate it. And this license procedure that we're talking about not only applies to raffles, but it also applies to other types of games. There's only certain types of games that you're allowed to conduct as a nonprofit. I don't know what a pull tab game is, but that's one of them. Punch boards, raffles, daily drawings, weekly drawings, 50-50 drawings, race night games, and pools. Now, by the way, bingo is in a kind of a separate category. There's actually a separate bingo law that applies to bingo particularly, and you have to get a special bingo license, but that's also a part of this process. In other words, you go to the same county treasurer and obtain your license. Now, there was also a question, I think, Barbara, about, you know, can I go outside the county where I'm licensed? The answer is yes, but it's probably a good idea to notify the treasurer of that county that you're going to be operating in that county, and show them that you do have a license to do this. Now, there are limits on how much you can actually offer as a prize, and the prize cannot exceed $2,000. However, you can ask for, if you do have you have to get the regular license, the monthly license. You can actually also qualify for a special raffle permit that allows you to exceed those limitations, and you can really go up to about $150,000 with that. But it is required that you do have the license. Now, as far as reporting is concerned, there is a form. It's called a W-2G that you report if you have if you're reporting more than or if you're paying out more than $600 and at least 300 times the ticket cost. You have to report on W-2G. If you file a 990 and you have more than $15,000 of revenue from gaming activities, you have to file a Schedule D on your 990. And you might also, unless most of your participants, or not participants, but the workers in the gambling activity are volunteers, up to 85%, I think is the rule. You also have to perhaps report this as unrelated business income. Another requirement is that you might have to withhold taxes.
Mhm.
If you're paying out more than $5,000, I think you have a withholding requirement. And I think the rate is 22%. It's the third lowest rate, is it not? That's what the statute said. Although a lot of the
It
websites
just
say
raised, I think they just
24%.
raised 24. Yeah, it's
Yeah, it's
24.
24. And if you don't withhold, the IRS can hold you liable for the taxes.
Yep.
So, there's a lot of information there, but you have to get a license. You get the license with the local county where you're located. If you are paying out, you have to report on the W-2G. And you also, if it's over $15,000, you might have to report on your Schedule G of your 990 and withholding responsibilities as well.
Yeah, if I can just piggyback on that, the Schedule G on the 990, if you hold any fundraising event, it doesn't necessarily have to be include a raffle or games of chance. If you have any fundraising event where you raise in excess, the gross is in excess of $15,000, that gets reported on Schedule G.
Yeah, it's actually called the fundraising and gaming activities, I think is the name of the form. So that's a good point.
And also on the W-2G, you do report also non-cash prizes. So if you have non-cash prizes that exceed $600, that also gets reported on the W-2G.
And Barbara, you were saying they're actually raiding churches.
Yeah, I mean, I've seen on the blog, sometimes in the paper that they, the church, they went to a church and they, were doing bingo and they didn't have the proper license for the bingo, or, they were doing a raffle or a 50-50 chance and they didn't have the specific license. I don't see it too often, but I have seen it. And I
Probably
believe
those
the
mummers.
state is kind of ramping
Mummers
it
are
up.
always getting raided for stuff
Yeah.
like that. Just a word on the bingo license. The bingo license is a separate license for some odd reason. And you're only allowed to have 2 bingo nights a week. But you can actually apply for an exemption where you can have 3 consecutive nights of bingo. If you really want to go crazy with the bingo, there you can do that.
And the $600, is that cumulative, like all the prizes together are worth $600, or is it like each individual one is worth $600?
No, it's individual.
Yeah, for
Okay.
you issue the W-2G to the individual who won, and if their prize is 600 or more, then that's how you issue it.
So
And
if the prize is not worth $600, then you don't have to.
no
Okay.
reporting
No
requirement.
Okay, good.
And one more thing. So if the prize is $600 or more, and it's a cash prize, you are allowed to deduct what they call the wager. So if a person spent $50 to win $600, you would report the net, but in that case, you would be under $600. So there is no reporting.
Yeah.
Okay.
A good point there. Yeah. That's the rule.
All right. So Kyra's back. Going back to leaving your fiscal sponsor. Let's say you got $50,000 in grants through a fiscal sponsor in 2022. That grant was reported on their 990. Then in 2024, you leave your fiscal sponsor and begin operations under your own 501c3. They transfer that $50,000 to you. What are your reporting requirements for that? Or is this like a very specific thing that Kyra should get in touch with you?
That one 501c to another?
Yeah, through a fiscal sponsor to a new nonprofit.
Right.
So they're transferring the grant that they received.
And the fiscal, go ahead, Ted.
I was going to say you report that on the 990 in some fashion, I would think.
Okay.
And the fiscal sponsor who originally received the 50,000 definitely reported that as a contribution, or they reported it maybe as a due to from. Do you know, Kara?
Contribution.
Oh, okay. That's an interesting question then, because it does seem odd that it would be reported twice as a contribution. I'll see what I can find out about that. Interesting.
Yeah, and there is a question. So all the contact information and the handouts that we were referring to in the video will be available next week and will be sent out to would be posted on the Heritage Commission website and sent out to all the registered participants. All right. It doesn't look like there's any other questions. Barb, do you want to ask another one?
Sure, and so I want to jump forward a little bit. I know that there was some other questions I wanted to ask on this, but I know we want to cut off our time at 11:30. Bylaws is a topic. You know, there's changes happening with diversity. Sometimes there's dissolution, you know, where people are worried about something being given, what happens with that. So I wanted, like, is there something in the bylaws that should be re-looked at? I mean, pretty much most groups read them and say, oh, no changes this year. But when you get into 20 and 25 years, no changes, then I think that there's some new things that need to be added or thought about with this topic. And then also too, should board members have their own personal liability for some of these, you know, when you're on the board? And then also too, should there be some sort of insurance on the board members, you know, with bylaws and their responsibility for, you know, the group, the nonprofit?
Yeah, let me address that. I just want to note at the end of this discussion that there are certain requirements that must be contained in the organizing document of the charitable organization to get a 501c3 exemption. There has to be a purpose clause, and there has to be a powers clause, which is not too broad as expressed in the regulations and the Internal Revenue Code, a limitation on lobbying and prohibition on political activity. And another one that we alluded to there was an acceptable dissolution clause. Now, these should be in the articles, not in the bylaws. The articles, by the way, are the document you file with the Department of State to bring your organization into existence as a corporation. That's the thing that legally creates the corporate entity. The bylaws are actually the operational document that really lays out how you're going to conduct meetings. Are you going to have board of directors? How often do they meet? That type of thing. And
You muted yourself, Ted. I don't know.
okay, I'm sorry
There we
about that. Some people are actually probably rejoicing over that. But anyway, there's also provisions in your articles that are required under the Pennsylvania Business Corporation Law. But addressing the question of, you know, what should you look for in your bylaws, and what are the critical provisions that I would be concerned about if I'm being appointed a board of directors member or an officer of a nonprofit? Well, one thing I'd like to see is a provision that indemnifies the directors and limits their personal liability. You can have a provision in your bylaws that if you are held personally liable as a director or an officer, that the organization will make you whole by paying any costs or damages that result from you being held personally liable. I'd like to see that. If I'm a director, I'd want to know that that's in there. Now, there is a change in the BC.
You did it. You muted yourself again.
There is a change in the BCL that I referred to earlier that implemented the reporting, the annual report, it also added some provisions that we can now provide in our bylaws. One of those is now, I referred to the fact that you can have a provision in your bylaws that limits the personal liability of directors. That's different than an indemnification clause. An indemnification clause says, if I'm held liable as a director or an officer, the organization will make me whole. There is also a provision you can put in your bylaws that says that a director cannot be held personally liable unless they did something that violates their duty of care as far as the corporation, or they did something grossly negligent. You can also now, under the BCL, have a similar provision for officers. So we want to see an indemnification provision and a limit of personal liability provision. Now, we're going to get to the other aspect of this, which is the insurance part of the equation. But another provision that the IRS is concerned about is a conflict of interest provision, that you've got a provision in your, because public charities are not supposed to inure to the benefit of individuals. And if you have a transaction between the entity and another entity or an individual who is also a director or officer or member of the tax-exempt organization, that's a conflict of interest and might even lead to disqualification of your entity. The question was also raised, Barbara, as to whether you should have sexual harassment provisions and other provisions that deal with behavioral issues. I'll just say this. It's not a bad idea, because if I sue you for sexual harassment, or your entity, there's going to be kind of one way you can protect yourself is to have a policy that is adhered to on a regular basis. In other words, and I'm going to talk like a lawyer for a second, as if I haven't been already, but in order to hold somebody liable, they have to be negligent. If I don't have well, from an entity point of view, if I have a policy that is against sexual harassment or states that I can't have any conflicts of interest, and I adhere to that policy on a regular basis, it is a good argument against the fact that the entity was negligent. So should that be in your bylaws? It can be, but a policy statement, an employee handbook, or a handbook that states the policy of this organization might be just as good as having it in your bylaws. But I don't think it's a bad idea, because it's a defense against being held liable as an organization. Now, another thing, as a board of directors member of any of a nonprofit, you are standing as a fiduciary in regard to the entity and also the assets and the general public. And what I mean by that is that you're really a caretaker. The entity doesn't really, in the eyes of the law, own its own assets. They're really viewed as kind of a caretaker for the general public and your fulfillment of your charitable purpose. So there are many instances, as a director, you've got to do your job, or you can be held liable if there is a problem from a financial point of view, or diversion of funds or something else, unless you adhere to your fiduciary responsibility. Now, what that means is that there can't be any conflicts of interest, but you've also got to be diligent in your job. You got to attend the meetings. You got to research. You got to get information to make decisions, because if you don't, you're not acting in a consistent manner with this responsibility that you have. In addition, there are a number of instances in the Internal Revenue Code where a director or an officer can also be penalized as well as the organization. One is where we have the donor advisory fund. I don't know whether you're familiar with that, but where you can donate money to an organization, and as the donor, you can suggest how it's distributed. Well, if it's not distributed in the proper way, the director can be held liable. Excess benefits, director can be held liable. Excess compensation, director can be held liable. Failure to file your information tax returns, your 990, the director can be held liable. So when you accept this responsibility, know that we want to have that protection in there in the bylaws. Now, we also want to have D&O insurance. Now, D&O insurance is directors and officers liability insurance. And if you don't know if they have it, it should be in the bylaws that you're going to get it. You should be familiar with what the terms of the policy are. That, of course, would be another source of protection. Another thing that a D&O policy will do is they will pay for your lawyer. If the company or you're as an officer, or if you're sued because of a breach of responsibility, the D&O carrier hires the lawyer and pays the lawyer. So, many people getting sued, even if you're not responsible, is a big deal because you got to put out all the money. Look at Rudy Giuliani. I mean, he's got to sell his condo. But D&O and policy. Now, if you're a professional, you might say, well, I don't need D&O because my professional malpractice insurance coverage will take care of me. Or if you're an individual, you might say my umbrella policy will take care of any liability. Not necessarily true. Check out the policy. See if it covers your activities as a director or an officer of a corporate entity. And make sure that that coverage is in place. So here's the summation. Bylaws, make sure there's an indemnity clause. Also, that there's a provision for obtaining D&O insurance, that there is a limitation on your personal liability, that the organization has directors and liability coverage, and you're familiar with what it covers. And can you get your own? Yes, you can. And that's maybe not a bad idea. If you're a professional, check your malpractice policy.
Can I just mention, you mentioned conflict of interest. A good rule of thumb is have the board members sign a conflict of interest form every year. Have a form completed annually and date it.
But that's a very good point. Anytime you have a transaction where there's any hint of personal benefit to a member or a director or an officer, you should always make sure that you've disclosed it to the board and you abstain from any decision-making process that might take place to approve that transaction. My recommendation would be, if there is any hint of conflict of interest, you just don't do it as an organization, because the IRS will look at that. And by the way, I mentioned that you're just a caretaker for the general public. Well, the representative of the general public is the Attorney General of Pennsylvania. If there's a violation, they're going to be represented by the Attorney General's office. And so I would just stay away from any conflict of interest transaction whatsoever.
Somebody, thanks Linda for adding that. And also asked, are there documents online that show recommended liability clauses and best practices for insurance coverage?
Yeah, there's plenty of them, and you can get them online, and they're all over the place. But my recommendation, just like I said, you should have a good accountant. I think you should have a good lawyer, somebody that knows what they're doing. You know, we can draft our own wills these days. We can draft all sorts of contracts. But you wouldn't do brain surgery on yourself. At least I wouldn't. I don't know. Like maybe you would. I don't know what I wouldn't do. Get a good lawyer. It's worth it. You know, I'm not trying to tout I just, we get
No,
a lot of,
Ted's 100% right. You need an attorney to help with the original setup and the organizational documents. It's just, I don't think it's something that you want to pull off from an online resource.
well, here's the other thing. You know, everybody's wants to fulfill charitable inclinations and, you know, participate in charitable organizations and, you know, be on the board. But remember, when you do that, you're also opening yourself up to potential liability. So make sure that that part is protected. So if anything does happen, you don't have to worry about it, that there's adequate insurance, that, you know, the provisions in the document are there, and, you know, no good deed goes unpunished, as we say.
True.
Especially if there's
And
lawyers around.
And I think Barb had like another question about changing the officers in the like if there's a change in the board of directors, how do you report that? And like,
Right.
Well,
is
Would
that
you
like an
report it to
incorporation?
the IRS? Or, I mean, I know that the state of Pennsylvania does have a form that you would send in, you know, who your new officers are. I'm not sure what happens with the IRS with that.
With IRS, you just report it on your next tax return.
Well, there is also a form too that you can report a change of address or responsible officer. It's 8822B. And
Right.
that's really,
It's not required though.
it's not required. Yeah, it's just make sure that they have the right address. So if they send you a dinging notice, that they can't say it was the last address in your tax return. It's not required, but you know, it's not a bad idea. For Pennsylvania, there's Rev 1605 to change the corporate officers, and 854 to change the address. Those are filed with the Department of Revenue, and they're basically to make sure you get notices at the right address and the right person. But there is also a form to change your registered office address, and I want to make sure that we distinguish what that means. Your registered office address is the address within the state of Pennsylvania where you are registered with the Department of State to receive legal notices and due process notices. If you're sued, anything going to that address is considered good service. So you got to be careful that if you have an original registered office with the state, that you follow up and change that, because you don't want a legal notice to go to your old registered office and you never get it because you're operating out of somewhere else, and they say, well, that's good service because that's your registered office. So that's a different thing. That's a DSCB 15 that you got to file, and it's also got to be approved by the board of directors. So
Does that have to be an actual address, or can it be a post office box?
can't be a PO box. No,
Okay.
cannot be a PO box. Actually, an actual address.
All right. Barb, do you have another question?
And then the last topic to cover today is dissolving a nonprofit, you know, the dissolution of a nonprofit, because we're coming across many small nonprofits that have become dormant, and they're just sitting there, and sort of what should they dissolve themselves, you know, the pros and cons of the dissolution, and also to the assets. I mean, where do the assets go? I mean, many of the historical societies have archives, things like that, you know. So that's sort of the general question.
Yeah, we get this a lot, actually. I've had a number of these. I was talking to you earlier before we got on with the program, that particularly with dormant nonprofits, that, you know, what's the process to dissolve those nonprofits? And there is a process. and it should be adhered to. And again, the idea here is to not only make sure that you've properly disposed of the assets if you're dissolving, but that you've protected the board of directors and the officers from any potential liability that occurs because you didn't properly follow the right protocol. There's a process. I'm just going to kind of go through it just so you understand that there are specific steps. And one of the final steps is maybe you go into the orphans court to get approval of what you do with the assets. Now, one rule of thumb is that generally speaking, when you dispose of assets and you dissolve a 501c3 organization, the assets must be transferred to another 501c3 organization. But there are some first of all, you should, and with dormants, you maybe not be able to do this, but originally, if you have an active organization, you have to have a plan of dissolution. It's got to be approved by the board of directors. If you have members, it has to be approved by the members. If you have a dormant organization, if you have members and you have a board of directors, you follow the same format. However, sometimes we can't figure out who the members are or who the board of directors is. And in that case, we can actually go through what we call an involuntary dissolution process with the orphans court, where we basically petition the orphans court, which is the court of jurisdiction in regard to these transactions, and ask that the entity be dissolved. It's called involuntary because if you're approving the plan, that's a voluntary dissolution. Now, another thing that you have to do is, once you've approved the plan, is notify your creditors. It's required that you send a registered or certified mail notice to each creditor of the organization and tell them that you're basically going to dissolve. In the city of Philadelphia, you have to file a notice with the city, and in other municipalities, you have to do it with the local government as well. There also is an advertising requirement. You have to advertise the dissolution in one paper of which is a legal reporting. In Philadelphia, it's the Legal Intelligencer. Delaware County Bar Association it can also receive these types of notices, and you also have to publish it in a newspaper of general circulation, like the Inquirer or Delaware County Times. Now, as far as distribution of the assets are concerned, the assets have to be distributed in the context of a 501c3 organization to another 501c3 organization. They cannot inure to the benefit of the shareholders or the members. That's a disqualification event. And there might be a provision in the bylaws that deals with where the assets should go. Otherwise, the assets, there should be a distribution schedule. And I always think it's a good idea to include in that, if you're going to sell any assets, to satisfy creditors and the list of creditors. So there's kind of a, here's what we're going to do. We're going to pay the ABCD, their creditors. We're going to then distribute the balance to another 501c3. And the rule of thumb is that if there's more than $100,000 of assets to distribute, you've got to go through the orphans court. But I think it's a good idea to go through the orphans court anyway and get the approval of the orphans court to your plan of distribution. And I'll tell you why. If we're all about liability and liability protection. Well, the best way to protect yourself from liability as a fiduciary, trustee, or a member or board of director member, is to get the approval of the orphans court. It's a get out of jail free card. In other words, if I get the approval of the orphans court, what they require is that anybody get notice, and it's advertised and all that kind of stuff. That's that advertisement is basically notice to everybody in the world that you're going to dissolve. So if you go through the Orphans Court procedure and you get the approval of the Orphans Court, nobody can sue anybody after that. You know, you have absolute protection from liability. So go through the Orphans Court before you start paying the creditors. Your full list of distributions, how you're going to pay the creditors, what you're going to do with the remaining assets. Now, a question came up too, Barbara, as can I sell assets to, you know, distribute and maybe distribute cash? Well, in a 501c3 organization, all assets are considered to be what we call charitable assets, which means they should be transferred in kind to the next charitable organization. However, that's another situation where you might be required to, you know, liquidate certain property, maybe investments or even real estate. That should be part of your petition to the Orphans Court, that we have to sell these assets to fund these liabilities. And, you know, that would protect you as well, that you haven't, you know, liquidated a charitable asset, and whether that would be a problem. Another thing is that when you submit your distribution schedule to the Orphans Court, you also have to notify the Attorney General's office so that they can appear and represent the public. And if they have any issues, they can voice them on behalf of the public as well. Anytime a nonprofit is receiving a testamentary bequest under a will, the Attorney General represents the nonprofit. And this is another context where the Attorney General actually represents the public and makes sure that there is some adversarial representation, so that if you're doing anything wrong, there's a voice to basically express those reservations. Another thing you have to do is get a tax clearance certificate. You notify the IRS and let me just go back a step. You get your tax clearance certificate, then you file your articles of dissolution with the state, and that's really the last legal step. As far as notifying the IRS, that's done on your on a final 990, and that's really the process. But what I want you to take from this is, if you're a dormant organization, there is a process. We can go through an involuntary, even if you don't know who the directors or the members are, we can go through an involuntary dissolution in the Orphans Court. If you're an active organization, there are steps, and the final step, which is distribution of the assets, in my opinion, should always go through the Orphans Court to protect the directors and the members and the officers.
Thank
I think
you.
many of the historical societies have accession and deaccession policies. Would that be like sufficient for what you're talking about, or is like just to refer to the accession policy, or do you need everything written out in your incorporation documents?
Well, the accession policy is in the bylaws, I would
It's like a
assume, or
separate
maybe in the
document.
trust document.
Yeah, it's a separate document.
Yeah,
that
well,
a
that
lot
would
of
be
them
a
have because
dissolution
of
policy
donations.
as to what they do and how they, and that is what, you know, the IRS is referring to as a dissolution policy, but you still have to go through the steps that I described anyway. If you're under 100,000, you could skip the Orphans Court, but I wouldn't do that
Okay,
unless
great.
you're talking about, you know, de minimis amounts.
All right, we have about 5 minutes left in the thing. Is there any other questions in the chat? No. Barb, do you have anything else?
Yeah, those were the primary ones, and the other sort of one was, how to change the information with the IRS, and we did cover that topic. I think that was about it. I mean, I did have some things on donations, but I think that was covered in a lot of our discussions today.
Okay, one of the handouts that I'll send over does cover what should be included in your donation acknowledgement letters.
Yeah, and I just want to mention too on that there might be situations where you have to file an additional form with the IRS, particularly if you're getting an automobile, for instance. There's a special form. It's form 1098C. And if you're getting income from donated qualified intellectual property, there's a form 8899. And if in fact you receive property and it's disposed of within 3 years, you got to file another form 8282. So, there's a lot of forms to file.
So just on that topic too of, for instance, the historical society I'm with, we have a property that was given to us 25 years ago. And you say to transfer, if we were to sell it, 501c3. So what if it goes to a township? Let's say, for instance, you have a 501c3, they can no longer take care of the building. The township is interested because of the historical significance of the building. Would that be something that would be, I mean, obviously you say to go through I think the AG office, but is that something that could be considered? Normally it's usually like a personal property where a family's like donating it, and working out negotiated with the township, and then the township manages it. But I'm just wondering about when you have a 501c3, what can happen with that property? Can it be sold that way?
Well, sure, but that would be something I think you'd want to go to the orphan. You can go to the orphans court
Or orphans
for
court.
approval of just about any transaction.
Okay.
And we do a lot of work with trusts, and if there's any transaction that's significant, like liquidation of an asset or sale to maybe a beneficiary, always go to the orphans court. I would think in that situation, because that would be considered a charitable asset, no doubt, and that transaction, I think, to protect the directors, that nobody could say you undersold the property, or that you gave it to the wrong person, sold it to the wrong person, or there's a conflict of interest. That would protect you, and that I think that's the way to go with that kind of thing. So.
Well, I don't see any other questions in the chat. So I guess.
Can I just mention one other thing, just because we have a couple more minutes here? There was a question that was raised about real estate tax exemptions and whether you qualify for real estate tax exception. And I want to say this: if you're not a religious burial place, hospital, law enforcement, library, or educational institution, you actually have to file for the exemption, and you do that with the Board of Tax Assessments here in Delaware County, and you'd have to substantiate why you'd qualify for that exception. Has to be a purely charitable organization.
All right, thank you. Thank you, Ted. Thank you very much, Linda and Ted, for joining us today. And it's a lot of good information, and it's helpful for me, I know personally. So thank you for joining us and doing this with us.
Thank you for inviting us.
Yes, thank you. Our pleasure.
Anything else, Kate?
No, that's it. Everyone is saying thank you very much. So
all right, everybody have a good rest of the weekend. Thank you.
Definitely.
Thank you so much. Thank you, Ted. Thank you, Linda.
Everything will be shared next week. So thank you all for coming, and I will end the meeting now, and I will be in touch with everybody. Thank you all very much.